Hello everybody. So today I want to talk about Mara Holdings, a stock that I own, a stock that I find dirt cheap and still dirt cheap. And today they reported a stellar Q4 to say the least. Everything's going well. When you look at the business, you wouldn't believe that this stock is down so much over the past year. You wouldn't believe that this stock is trading at only 21% premium over the Bitcoin on the balance sheet. Granted, it went up quite a bit, right? You may remember yesterday this stock was only trading in the single digit, something like 7 or 8% premium over the Bitcoin on the balance sheet. It went back up. Thank goodness, given how good their results were and how cheap this stock is. I'll get to how cheap the stock is in a second. I just want to point out that, of course, these stocks are depressed. These stocks are shorted because the market's not doing well. Nvidia is down. Go figure why. I don't know why Nvidia is down. Everything seems perfectly fine for Nvidia. The market's just being scared about the tariffs and the narratives around the tariffs. Today, the home transactions in the US today, the lowest in the history. There's never been fewer homes sold in the US. So the economy is showing signs of weakness. And so everything's dumping, everything's selling off. And this is especially true of Bitcoin and crypto, which is still seen, well, especially for Bitcoin. Crypto is a risk-on asset, but Bitcoin is seen as still as a very, very risk-on asset. While, of course, if you've been in Bitcoin for a long time, you actually fundamentally believe that Bitcoin is not a risk-on asset if you've been in this asset for a long time, like I have. But anyways, everybody's so fearful in the Bitcoin market and in crypto. Extreme fear, it's a 10. So usually when Bitcoin is so fearful, usually you get a rebound. We'll see. Who knows? We may get into the 70s. I have no idea, but I do think we're due for a rebound, although I've been thinking that for about 2 weeks now. So I may be, I'm very bullish in general. So keep that in mind when you watch my videos. We may go to the high 70s. I don't know. The point is right now is extreme fear, and I think Mara is really suffering because of extraneous circumstances. It's not suffering because of business circumstances, because they've been doing a lot of good stuff on the business. So let's talk about the business. The business revenues increased 37%. That means they've mined way more Bitcoin. That's what it means. And of course, the price of Bitcoin has gone up. So they mined more Bitcoins in dollars is what I mean. Their hash rate is 53 exahash. That's the biggest miner out there. I think their miner 2 here is CleanSpark, I'm pretty sure. Or it could be Iron. I'm not so sure which one they're using. Anyways, they are the biggest Bitcoin miner by market cap, by hash rate. Let's look at the adjusted EBITDA. For a full year, they earned 1.2 billion adjusted EBITDA, almost 800 million in Q4 for adjusted EBITDA. Their cost of energy to mine the Bitcoin, and this is a company that has been buying energy assets. This is a company that's trying to get these 1 cent per kilowatt hour assets. They're trying to get the gas flares. They're trying to get the excess wind. That's why they bought a wind farm. But anyways, they're now under a 4 cents per kilowatt hour, which is very low if you follow this space. A lot of miners get in under 5 cents, but 4 cents is pretty rare. They've energized their hash rate. They have more hash rate, 53 in Q4 2024 versus 24 exahash in Q4 of 2023. So the hash rate went up by 100%, and they've not only acquired Bitcoin, but they've hodled the Bitcoin that they mined. So they've got an increase of Bitcoin in Q4 of 15,500 Bitcoin, and the BTC yield, which is stunning, 62% Bitcoin yield. So they've been able to have a Bitcoin yield in line with MicroStrategy's Bitcoin yield, but remember, they trade at a much lower valuation than MicroStrategy. So that's why I'm saying this company, which is an operating company, by the way, it's not just buying Bitcoin and doing nothing else. Well, Sailor has a small software business, but still, they're an operating company. They're doing money. They're making money the hard way, and they still achieve a 62% Bitcoin yield. So let's look at the valuation, because really, what I love the most about this stock is the valuation. Other Bitcoin miners are much more expensive. Look at Riot, look at Hut, look at even CleanSpark. Other Bitcoin miners are much more expensive. So they have older miners. They have an older fleet. That's point number one. But despite that, they've been entirely battered by the market. Because look at it. So okay, the market cap is 4.5 billion for this stock. Cash at Q4 is 392 million. They have 2.5 billion of debt, and much of that debt has to do with a convertible that they issue, a convertible debt that they issued to buy Bitcoin. So the enterprise value is 6.6 billion, and their adjusted EBITDA was 1.2 billion. So enterprise value over adjusted EBITDA is a 5.5x. Market cap over EBITDA is a 3.75x. There's no other way to put it. These are ratios that you get from a failing company. A company that's about to file for bankruptcy, that's typically the price ratios that they would get. Whether you use market cap or enterprise value, it doesn't make a difference. It is still dirt cheap. Now, I would make a case that using market cap is better for Mara, because what's going to happen to that debt, right? That debt's going to convert into equity at some point in the future. And so if a debt converts into equity, you don't really have to pay it back. You dilute to pay it back. And if Mara dilutes to pay it back, then really the market cap is more relevant than the EV. But I'm just putting EV for the sake of completeness here. 5.5 EV EBITDA. If that's 5.5x. Market cap over EBITDA is a 3.75x. Now you could look at it another way. You could use the Bitcoin yield, and you could kind of infer what the Bitcoin dollar gain. I'm inferring a Bitcoin dollar gain of 1.46 billion at 85,000, and feel free to look at my calculation here. This is not that accurate. This is just back of a napkin math. This is my inference. But if I look at the Bitcoin dollar gain of, let's call it 1.46 billion, roughly, what do you get? We get an enterprise value over Bitcoin dollar gain of 4.5x, and we get a market cap over Bitcoin dollar gain of 3x. So again, this stock is trading 3 times its Bitcoin dollar gain. So it's cheap no matter how you calculate it. It is cheap no matter how you calculate it, and it is hard to understand why this is trading this slow. Let me move on and talk a little more about the strategy. Of course, when you look at a stock that focuses on acquiring more Bitcoin, whether it's MicroStrategy or whether it's Mara, what's important is the sats per share, the Bitcoin per share, or as Mara call it, Bitcoins per 1 million Mara shares. And that's the metric that they're optimizing for. That's why dilution doesn't matter as much if you start reporting how many Bitcoins you have per share, as opposed per fully diluted share, as opposed to just looking at numbers. Of course, dilution matters a lot when you're just going to compare dollars and you're going to compare, EBITDA. Yeah, dilution then matters. You got to include that. But if you compare on a per share basis the number of Bitcoin, then it's the dilution is accretive. This is the thing that the market has a hard time to understand for these stocks, is that the dilution is accretive. So in the case of Mara, you can see the 62% Bitcoin yield meant that on December 31st, 2023, each million share of Mara represented about 60 Bitcoin. And today, each million share of Mara represents 97 Bitcoin. So they've accreted. They've increased the number of Bitcoin for the shareholder. And how do they accrete? Of course, well, they've done their convertible debt, right? They've diluted via the convertible debt. Although this doesn't show just yet today, this just shows as debt. I believe that convertible debt will be paid via being converted into equity, so we'll have dilution in the future to pay that debt off. But they also did the ATM. So like MicroStrategy, they do an ATM, and that ATM, of course, dilutes the number of existing shares. And so their ATM usage was 43% of cash needs. You can see they raised $1.8 billion with the ATM. They raised 2.2 billion with the convertible bonds. They also have a line of credits. They also have some proceeds from some sales of digital assets. And what did they do with all of that money that was raised? Well, they bought Bitcoin. That's the biggest chunk. And then they did their capital investments. They bought sites. They bought the wind farm. They financed their operations, etc., etc., etc. It makes sense for these companies to finance their operations and to finance their purchase of Bitcoin via dilution, because it's much more tax efficient to get money into the stock via dilution than it is to get money into the stock via selling Bitcoin and paying taxes on the sale of that Bitcoin. And so that's why investing in these companies, in my view, requires an entirely upside down way of thinking about the business. You gotta think about the business via the cash flow statement and not think about the business via the income statement, because the income statement means tax, collect tax. You go by tax. If you go by the cash flow statement, yes, you dilute, but if your dilution is accretive, then it becomes a good idea to do it. And I think there's no denying that it's been accretive for Mara, because if the goal of owning a stock like a Bitcoin miner is to get more Bitcoin exposure, which is my entire goal of owning a Bitcoin miner, I want to increase my Bitcoin exposure, then I'm okay with the dilution. And of course, they acquired 7 sites, so that dilution went towards the acquisition of sites. And so you have that additional layer of risk compared to, say, a MicroStrategy where you only have Bitcoin risk. In the case of Mara, that dilution goes towards buying more Bitcoin, but it also goes towards acquiring more sites for the business, which then will eventually lead to more Bitcoin being mined. But you many degrees of freedom removed from getting the Bitcoin. While if you just go outright and buy Bitcoin outright, you are not removed. But anyways, they've been doing very well on their operation. So you can see the cost per petahash, the daily cost, went down 17%. They've invested in reducing their cost of mining. You can see their fleet went up. They've been moving to a more efficacious mining fleet. Notably, they've used the liquid cooling. They have this technology now. This is their Granbury plant, and they are investing a lot of money in the liquid cooling idea, which is just have these Bitcoin miners liquid cooled in order to increase the efficiency of older miner. This is not a water, by the way. This is some sort of a fluid that they use that's resistance to electric current. Anyways, I digress here. Another thing that they've done, of course, is they've increased their operational hash rate. They've reduced the cost per hash rate. They've doubled the profitability of the Granbury site, for example. That's this big site right there that has containerized liquid immersion cooling, and this is part of their strategy to be a vertically integrated, fully integrated Bitcoin miner. The last few things I want to say about Mara. One of my big questions about Mara is what's going on with the convertible bond strategy. Are they gonna keep pursuing the MicroStrategy strategy? And we didn't get a clear yes or a clear no in the call. So I looked in the call. This is the whole idea of them, of course, issuing a convertible debt to buy Bitcoin. The analyst asks, what's going on? Do you intend to do that again? And the CEO said, well, that was the best thing to do at the time, and they're very pleased that they did it because it led to a 63% yield that year, Bitcoin yield, a 63% Bitcoin yield. And the CEO essentially said, we're going to manage towards optimizing the Bitcoin yield. So it's not a clear yes, it's not a clear no. My guess is that if they have another opportunity to do it, they will just go ahead and issue convertible bond to buy Bitcoin if an opportunity for a good yield presents itself. But most of the call, make no mistake, they are not exiting mining. Most of the call was focused on mining operations. They are not exiting mining. They're also looking at AI and what AI could mean for them, and what, not training, but inference. The CEO talked a lot about AI inference, what inference could mean for them. So anyways, I'm not the fondest of these Bitcoin miners investing in AI, but frankly, it seems to be every single Bitcoin miner right now is getting into AI. So they must be seeing some opportunity that I'm not seeing. It's not relevant for most of the businesses right now. Most of these businesses still make most of their money from the Bitcoin mining. Mara's grand strategy is vertical integration. And what does vertical integration mean for a Bitcoin miner? Well, vertical integration means you do everything. So in their case, it means they want to generate their own energy, and that's why they bought the wind farms. That's why they have partnerships with gas producers. Of course, they do their own build out, but they also have, not only do they build their own mines, they have have their own build out, but they also have their own software, and they were showing their Bitcoin software capability in the shareholder letter by them being able to engrave on the blockchain a picture of Donald Trump. That was an example, a demonstration of their mining software and their Bitcoin software, how they can just do things on the Bitcoin block. Very interesting that they develop their own software. That's part of vertical integration. You want to own your software. You want to own your land. You want to make your own energy. And the last thing you want to do, of course, is make your own Bitcoin mining hardware equipment. And this is all linked to their investment in Auradine. Can't remember how much they invested. I think they had invested seeded in Auradine, something like 90 million or something. But anyways, they own a maker. They partially own a maker of Bitcoin miners, and they're now deploying the Bitcoin miners that they then partially make since they own it. And so interesting strategy right there. Might be a way to maybe avoid tariffs on China's Bitmain Bitcoin miner. There could be tariffs. This is maybe part of the fear too. Maybe a lot of these miners are waiting on shipments from Bitmain in China, and they're thinking, oh wait, there's going to be 10%, 25% tariffs on my Bitcoin miners that are made in China. So that could be a way to diversify, but I'm pretty sure they make these miners in Asia too. So that would be interesting to see, but not in China. So anyways, this was the general view of Mara. Loved the quarter. Love the stock. Happy to own it for the long run. Main reason why I own this stock is because it is dirt cheap in the Bitcoin space, and that's my main thesis. It's so cheap. It's not gonna stay this cheap forever. That's my main thesis. So, anyways, this was not financial advice, not investment advice. This is only entertainment. I hope you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.